GetCrack. Wake up, motherfucker.
Home Depot breaking a 2-year streak of negative same-store sales, but they did issue some weaker than expected full-year guidance. Here with his take on the numbers, Morgan Stanley analyst Simeon Gutman has a 450 target and an overweight rating on the stock. Simeon, thanks for the time this morning. Good to see you.
Likewise. How you doing?
Good. Can you put these comps into some perspective, the guidance too, and then sort of related to the yield backdrop that we're looking at today?
Comps are normalizing. We're on a path that if you look over the last 2 years where we had negative comps, you're cycling those tough comparisons, and the industry naturally grows. We've given back the excess consumption that occurred during the COVID period, and we're normalizing some of the ticket, some deflationary pressure from the ticket. And so everything is starting to stabilize, to turn. You've got a little bit of a bump from hurricanes, from weather in the fourth quarter. But outside of that, it looks like we're on this curve of stabilization. We're on this glide path to actually get a little bit stronger in 2025.
I was going to say, seasonally, not a bad time to have all this happen. Am I right?
Nope. Yeah, seasonally right. I mean, weather is always a factor at this point of the year. Over the years, it's actually become a bigger and bigger factor at the end of the year. You want unfavorable weather because it's in the comparison base, and now we go into spring selling season. We'll see what happens. You mentioned the yield backdrop. That's not favorable. Home Depot even said that they're not building in much of any change in turnover into their outlook, which was interesting because, you know, we're thinking it's going to be a little bit better. Existing home sales up mid-single digits in 25.
So if we are talking more and more about a cyclical trough, to what other names might your enthusiasm get spread?
Look, peak to trough, there's a bunch of names, cyclical. Besides Home Depot, you know, the number one competitor, Lowe's, Floor and Decor would be in that group. And then think about home furnishings. We have a bunch of home furnishing names. Peak to trough, the idea is that demand is bottoming, earnings cycle runs. So Restoration Hardware, Wayfair's, Williams-Sonoma's of the world. That would be the group of stocks that would most check those boxes and most leverage to a housing recovery.
Are you seeing anything in other areas of macro, employment, or spending intentions that might collide with a better demand backdrop?
Maybe just recently, a little bit of wealth effect, sentiment. I think a little bit of uncertainty to start the beginning of the year. Even Home Depot said it themselves. There's some aversion to these higher rates. Consumers are not taking on or borrowing money to pursue discretionary projects. That's pretty much it. We're overall stable. One of the things we've been watching for 3 years, services spending, taking a lion's share of an overall consumer budget. Service inflation is still sticky. We haven't fixed that yet. And a consumer is still spending on services, prioritizing some services, elective services like travel, leisure, over non-elective ones like healthcare. So there's a lot of pressure on that wallet that's inhibiting how much the consumer can actually spend on goods. Until that inflation moderates, we're pretty much stuck in this range.
Right. Finally, this conference board number today, biggest drop since 2021, getting some attention. In general, when you think of home builders or home furnishing, anything housing related, does that lean toward the discretionary side, or is that something that if a consumer needs to do it, he's going to do it?
Unequivocally, it leans towards discretionary. But in any given year, 90 to 95% of home improvement demand comes from homes that are not turning over. And that's somewhere 60, 70% maintenance and repair. So the industry replenishes itself nicely year on, year out, and that's the nice thing about the home improvement industry. So 20, 30% of the spend is probably discretionary, and then, you know, an additional 5 to 10% needs to come from turnover every given year, and turnover is directly related to discretion.
Interesting. Well, we'll see what kind of ratification we get from Lowe's tomorrow. And thanks very much, as always.
Thanks.
Consumers keep getting prodded. First it was eggs. Now cattle prices are hitting a record high. Pippa Stevens is here with more. Pippa, I imagine this means our beef prices?
That's
so forth?
Exactly. So it's all going up. And basically, cattle prices are hovering around their January all-time high, making consumer steaks a little bit more expensive. Beef prices are now outpacing overall inflation, with January CPI report showing a 5.5% rise year over year compared to 3% headline inflation. And for the time being, consumers are not pushing back, spending a record $160 billion on beef products last year, even as prices hit $8 per pound. But cattle ranchers cannot just increase supply when prices rise. Last year, beef cow inventory in the U.S. stood at roughly 28 million head. That's the smallest herd since the 1960s. Ranchers have been reluctant to rebuild herds following years of depressed prices, expensive feed, high rates, and unpredictable weather. Alton Callow from Steiner Consulting told me that while prices will be volatile, the trend between now and 2026 is higher, since there is a very long lag time as well as a disconnect between futures prices and retail prices, since it does take a while for higher producer costs to trickle down. So, if you're going to be ordering the steak anytime soon, it's going to cost you more.
So how much of the steak is also imported? I mean, is that going to get affected by tariffs? And then, the prices here will stay high because now you can actually raise prices?
So that's another big outstanding question. We get about 6% of our cattle supply from Canada and Mexico. And so for the time being, the people that I've spoken to said that we probably won't see an immediate impact from tariffs simply because these trade relationships have developed over decades. And so if you're, for example, a farmer in Mexico and you've always sold to processors or feedlots in Texas, you don't necessarily have anywhere else to send your cows. And so for the time being, you might say, okay, it's worth it for me to absorb that cost rather than have the feedlot pay a higher price because there's nowhere else to go. But longer term, that eventually starts to get trickled down to consumers.
Do you know offhand, Pippa, what's going on with chicken prices? Because here's what I find strange. Egg prices are constantly high. They're a problem. It's abnormal. But then you go get chicken, and I'm like, okay, it's a little high, but it's not as bad as it was during the pandemic. Doesn't it come from the same bird, especially if there's a trade-down effect happening with beef now as well?
Yeah, you always have to look at the different types of meat we're talking about and where consumer preferences stand. There's also, in the cattle industry, there's restocking your herd, similar phenomenon in the chicken and the avian industry. And so right now, of course, we saw that mass culling thanks to the bird flu, and that's what's really driving up those prices of eggs. But chicken has always been kind of a trade-down meat, and so the prices have traditionally been pretty depressed. But particularly now, when you see egg and beef prices rising, then we could start to see momentum shifting to chicken.
All right, not what the
Okay, well, food is going up as expected. So I think if we got the La Nina effect and you got China, so the feed prices will go up. So soybeans and corn will definitely go up. Those two will definitely go up. And then we got the wheat prices to follow with it. So you got the soft commodities moving. And then when China's economy returns, not only energy prices will go up, pork prices will go up. Chinese love pork. Once you see those prices spiking, that's it. All your meats are going up. So you guys better learn how to eat goats then, I guess. Oh, shit. Anyhow, very good. Very interesting. So the big news today was a report, very conveniently timed, about semiconductors. So let's hear this one.
Washington. Let's get it to Washington in full. The Trump administration reportedly considering tighter export controls on chips to China. Eamon Javers and Christina Partsinevelos have the details for us and potentially what the fallout would be. Eamon, let's start with you.
Hey there, David. That's right. Bloomberg is reporting today that the Trump administration is eyeing even tougher restrictions on semiconductor exports to China than the recent Biden administration had put in place, and those were seen as tough at the time. Citing people familiar with the matter, Bloomberg reports that the Trump administration officials are holding meetings now to discuss new limits with key U.S. allies and working on a longer list of restrictions that could be put in place in the coming months. Now, the goal here is to slow China's overall technological progress, and especially so in sensitive areas like artificial intelligence. The Trump team is looking at three specific possibilities: curbs on sales of chips that NVIDIA designed specifically for China, reducing the computing power that can be exported without a license, and putting more restrictions on types of NVIDIA chips that can be exported without a license. Meanwhile, in a press event yesterday, you guys were talking about this with French President Emmanuel Macron. President Trump said he is on track to reimpose tariffs on Canada and Mexico after the 30-day pause that he put in place comes to an end.
We've been mistreated very badly by many countries, not just Canada and Mexico. We've been taken advantage of. The tariffs are going forward on time, on schedule. This is an abuse that took place for many, many years.
Now, under the terms of the pause, the new deadline is March 4th at 12:01 a.m. Eastern time. We'll see what happens then, guys. You saw the president announce these tariffs. Then he announced a pause in the tariffs. Now he's announcing that things might come back at that deadline time. We'll see where we go when we get there. The president likes to keep a lot of these balls as live balls in the air so he can continue negotiations. We just saw a headline from the Mexican President Sheinbaum in the past hour saying that she continues to negotiate and she's hoping for a favorable outcome there. So clearly this is a moving target, even though we have that soundbite from the president yesterday, guys.
I mean, it raises the question, Eamon, about why he wants to go forward on tariffs. Is it to get the concessions, for instance, the troops along the Mexican border, which it sounded like they were ready to make a deal with, or does he want to use it to raise revenues, which he's talked about before, to help fight off the deficit?
Well, he's said several different things, right? One is that he wants, the Mexican and Canadian governments to help in the fight against fentanyl. The other is that he wants it to help in terms of lowering the deficit, as you say. The other is that he said that he wants to use tariffs in order to increase U.S. manufacturing and just protect American industry. You know, all three of those goals are somewhat mutually inconsistent. The president cited all of them in the reason why he likes the tariffs. He likes the idea of tariffs, but when he gets close to that deadline, there's always a pause, there's always an extension, there's always a study to be conducted, because I know that the president watches the stock market very carefully, and he doesn't want to spark any kind of negative reaction there as well. So he wants to have his cake and eat it too, and that's tricky to do.
Amen. We'll talk in a little bit. Lots to talk about.
Looming U.S. restrictions you just talked about are expected to keep NVIDIA's guidance in check, since they would tighten measures on GPU, or we can call them AI, chip sales to China. Morgan Stanley, just one example of sell-side research that bets NVIDIA's April Q1 guidance may not be as grand as everyone hoped, but should still move up at least an average of $2 billion, so not bad. And that's because NVIDIA still sells export-compliant AI chips to China. They're called the H20s. The success of China's DeepSeek large language model has caused really a surge in H20 orders just over the last month for customers like Tencent and Alibaba. The assumption, though, and this assumption has been going on for a while, that's why this may not necessarily be new news, is that these chips would be the next to be restricted, which explains why NVIDIA has been so vocal about the potential damage, saying, quote, in a blog post, these rules would do nothing to enhance U.S. security. The administration worries China, though, has been circumventing the rules that are already in place, going through Singapore or buying on the secondary market. It's hard to stop when a quick eBay search, which I did this morning, will show NVIDIA Hoppers that you're seeing on your screen selling at about $29,000 a piece. NVIDIA has a relatively low exposure to China at around 15% of revenues, according to IO Fund, similar to both AMD and Micron, but equipment manufacturers, they're the ones that have greater exposure. Almost half of ASML's business goes to China. Lam and Applied Materials also face significant risk, which really makes the administration's efforts to contain China's AI ambitions a real high-stakes game with billions hanging in the balance, but none of this is expected to be imminent in, let's say, the next month or so. Guys.
Was DeepSeek revealing in any way? Obviously, the point of all of these policies have been to prevent China from having the advanced semiconductor capabilities and AI and military in particular. But I know DeepSeek was a big wake-up call in terms of cost. What about in terms of technological capability of these Chinese models?
Well, yeah, that's why we're seeing this Russian order for H20s, because DeepSeek was able to provide advanced compute with, I'm not going to say lower quality because the H20s have great memory, but a more watered-down version that is compliant. So now that would be the next target for the Trump administration because, hey, look, China was able to be really successful with this lower-tier chip. So they're just going to keep doing it, but that's also encouraging the Chinese market to create, to go overcome these hurdles, right? And make quality chips and make advanced large language models with what's available at the moment.
Got it, Christina. Thank you. For the moment, we're seeing a lot of pressure on these semis, dragging the entire NASDAQ down. NVIDIA at the bottom of the list, Broadcom down there as well.
Okay, well, yeah, that's a good thing because I was looking to buy finally. And Bitcoin finally did what I wanted to do last week. So kind of disappointing. I was willing to short last week around this time, but damn, I was 1 week too early, I guess. I don't know. I don't know why I didn't decide to short this time around. I was just like, it's too close to Nvidia. I didn't care about it at that point. I guess also because I already made enough on trading SMCI too for the last several weeks. It's sort of yeah, I don't feel greedy right now. So, but yeah, that's what I wanted to see last week, not this one. Okay, so now that that's over, well, I don't know. It might not be over. Okay, so let's look at Bitcoin right now. I was expecting it to try to hit 80,000, not this 85. 85 is still a little bit too. I don't know how strong this is. Let's see what happens after all this volume. There was some volume coming in. That's good, I guess. I expected a lot more response like this one. So since February 3rd, kind of like that. But yeah, same volume. We're down. The next candle better be a super green one to shoot it back up. Now, I'll tell you this. We have to watch out for max pain for the crypto guys, okay? So there's going to be some max pain for the crypto guys. So let me show you what the max pain level is. Let me see if I got it up here. Okay, let's see. All right, get the link. So here's the link for you guys. You guys can always look this up yourself. Okay. All right. Let me get that up. Man, it's always hard to find stuff around here. Blah, blah, blah. No, no, no. Okay, nope. Okay, here it is. All right, let's get this thing done. Okay, max pain. So let's look at the max pain. All right, guys. Max pain for crypto. Let me see. I gotta. Okay, unblock these elements. Refresh. Okay, so here we go. So this contract expires end of the month. So you see a lot of volume, not a volume, I mean a lot of contracts out. Notational value, $5 billion of bets ending this week. Okay. And max pain is around 98,000. So if you look at where we're at right now, we're closer to 80,000. Right? So this is very tempting. Very tempting. So I bought a bunch of MSTR longs today. So let me show you. Okay, let me show you. Man, I wish StreamYard's just kept like a buffer of which window I'm using. Really annoying. I guess, it doesn't have OBS type features. But yeah, we tagged 86,000. Okay. That's the last limit. Once we drop there, we have to go to 80. I was hoping we just crash right to 80 and then have a sharp reaction up right within one day. That would have been a lot better. Then I would be more confident in seeing like 100K again or 108 by Friday. That would have been a lot better. I would have got a lot cheaper MSTRs too. So if you look at MSTR, we went right through like this gapped area here. So we fell through right here to 250. Now we're trying to go down to 230 or something like that. So I said, okay, well, this is probably peak bearishness for now. If this thing is going to go continued onward to 200, it's going to have to touch 300 again. I think somewhere around 300 before continuing on down. Okay, so I'm going to use MSTX. So I can show you the chart here with this. Okay, so you see that gapped area. I shaded it. here. So we tested it yesterday, but unlike in December, so end of December, New Year's, we bounced right off of it. We just got stuck there. And so, yeah, most likely I day traded this move just from here to here, right? So I just made my 1,000 and just called it a day. So if I'm willing to swing it, if I'm going to willingly buy and hold through multiple days, you got to give me a good price. Now, the best price would be 200. If we went to 80,000 Bitcoin, if we had a panic sell today, yeah, we probably would have got that 200 on MSTR. That would have been a lot better buy. But since we didn't, and I highly doubt anything's going to happen tomorrow until NVIDIA. Okay, we got to get NVIDIA to report. I mean, maybe NVIDIA reports badly and then this thing goes down Thursday. Could be. But I'm going to bet no. It's too close to max pain at that point. So I'll take a chance. So I'll buy here. So I'm using MSTX. So MSTX is the 2x leverage. Okay. So it's down 22% today. So very nice, very cheap. So we got around to 23, 21, 22 area at the bottom of today. So I just scooped some up here and we'll see what happens tomorrow. Okay. Hopefully it will recover a little bit. And then after hours, we'll see what NVIDIA does. Okay. With the earnings. That's going to be really important for the overall market. The other one was SMCI. Okay, perfect. This is what I expected. So it tried to hit the 60s, right? And then it pulled back to 45. Again, that was what I was thinking going to happen. 45, perfect. Buy it. And guess what? I got lucky because after hours, they had news that they submitted their SEC, the delayed SEC. They submitted their homework finally. So their homework that was due like 2-3 quarters ago, they finally submitted. And so it's up like 20%. So if you're using SMCX, you're up. So I got lucky. I didn't expect any news today or after hours, but I just saw like, hey, it hit the target. SMCI hit 45. So I'm going to buy back SMCX. I got it back. $70 at the end, the closing of the day. And okay, now it's going to shoot up to 120 or something tomorrow, I guess. If it holds, I don't know. I don't even know if I'm going to hold it until NVIDIA. I probably will sell it. I just threw 10,000 in there because, you know, I wasn't going to bet big on anything right now until NVIDIA's over. But I'll take it. I'll take 5K for tomorrow and then I'm done. So that's great. So I'm done for the week. So usually this is what I'm telling you guys. You just should just make 1,000, 2,000 a day if you're going to do this kind of quick trading stuff with the way the market is right now. If you make enough every day to average out, like, I mean, you're not going to make like a K every day. Sometimes you'll make 2K, maybe you'll make $500. I don't know. But let's say you average out, right? So 5 trading days a week on average. You got 52 weeks. Okay, well, there's going to be holidays and whatever. But, you know, that's like, let's say you make like 500 to 1,000 to 2,000. You should be making around 200,000 to 500,000 a year with that kind of trading. Okay, I mean that's all you need. Yeah, like don't be too greedy here. Like so that's why, you know, a lot of times I'm happy with just like 6%, 10% in a day. I'm really not aiming for some crazy. So yeah, I could have shorted MSTR. I know because I was looking to short it last week, and it finally happened this week. But I said like, blah, I didn't want to. I mean, yeah, this would have been a killer short. Like right on Friday, right? And then I would have been like, okay, Monday and then Tuesday. And it's like, crap. That's like 40% from here to here with the MSTZ, the inverse. But I was like, fuck it. I ain't doing that. So yeah, it's tough, man. Trading's tough. I think the hard part about it is you have to recognize all the opportunities and choose which risks you're willing to take, right? Because if you just look at this chart overall, you have like starting to curl down moving averages since February 3rd. So this was the last green candle, failure here to make any movement from that. keeps testing lower highs, then you're like, well, yeah, here we go. Bye bye. Eventually, it just collapses because, yeah, there's just too much weakness. Of course, Bitcoin is Bitcoin, so that's kind of the risk you take. You never know if somebody's going to say something and pump it up again, because that's what it was doing like several times. It was like, oh, pump it up. Oh, go back down. Pump it up. But over the last weekend and then starting on Monday, I guess it just decided to give up. It just gave up. I don't know why it just gave up so badly, but I guess, yeah, Bitcoin just they got tired of it. And before Max Payne too. So we got Max Payne. Max Payne is at 98. So this thing will probably go back towards 98. I don't know if it's going to go all the way to 98. But no, I wasn't. Yeah, see, Tropes, I already answered your question. I wasn't using that. I wanted to do it last week, but it didn't happen. So then I said I gave up on the idea of trying it out, because I said, forget it. I'm just like, I'm done. I made my money with SMCI last week. I was already doing it. Like I already got my money for this month. So every month I always have a target. Like I make this amount of money this month or this quarter or something like that. You just need to make a goal. You set your goal and then you go there. And then when the market is like this, you don't make big bets. It's just like, it's over. It's really over because it's so volatile. You don't know which way it's going to swing, right? So like today, I just watched the first 5 minutes, and if I don't see anything good, I'm just like, I'm out. I'm just not gonna even try. So today I didn't even bother trading today because it was just like, it looks like it's just gonna puke, and I'm just not gonna willingly short, because if I short, I have to pay attention. Like, because when you short, there's always gonna be a buyer somewhere down there that's gonna try to lift it back up. So you don't know when it's gonna happen. Today it looked like it just puked, went all the way down for a lot of stocks and just stayed down, right? The index, NASDAQ and S&P tried to recover a little bit, but most of the stocks, we're paying attention, like SMCI, MSTR, like all kinds of stocks we were talking about last week or 2 weeks or the last month, they just puked and just stayed down. That's it. So that's why I said, like, if you want to short, you short individual stocks. You don't play with the index. You short like stocks that are like this, that move up very quickly, right? For the last like election and all this stuff, they'll just lose it all real quickly. So shorting individual stocks makes sense if you can time it. Shorting the index, that's a harder game because, as you know, index is lifted up by people's 401ks and buying algorithms and blah, blah, blah. So you don't know where it's going to hit the wall and just decide to bounce because there's nobody left to sell. So, Charles, you stayed in SMCX? Man, did I like warn? Like that was it? That was done? So, anyway, tomorrow I'm probably going to get out of SMCX. I don't know how high it's going to go tomorrow. Maybe you'll just lose it all in pre-market. Heck do I know? I just need it. Well, that's why some of you like Antoine are trying to learn options. You can do it with options, right? But options means like your level of trading has to be very good. Very good. Not like my level. My level of trading is still like, personally, I feel like it's terrible. It's just like I'm not perfect. Like options means like you have either a very good strategy to compensate for your sloppy trading or your trading is very good. Like you precisely can read the chart very well. That I think very few people have. So it's hard, I think, to decide if you just, man, I mean, it was just better back in the old days. In the old days, you just made a lot of money, just buy and hold at the right points. You don't need to do this trading crap. And then after that, you build a big account, then you start trading. But the reason I'm doing this now is like I don't believe that can be done anymore. It's over. The boomers took all the money. Millennials like me took all the money. Or Gen X. Actually, I'm kind of between Gen X and millennials. So yeah, we took the money too. And then, so now everybody else left over who's younger than me, it's like, it's not going to work anymore. As you can see, like beef prices are up. Chicken prices are going to go up. Egg prices already up. Pork prices, I think, will go up. So yeah, even the crappiest meats will go up. If you see pork and chicken go up, I'm just like, God damn, man. So it's just gonna keep eating away at your money. All this stuff is like, it's hard to just like have money, keep money, and make money in the market the slow way. You're going upriver. You know what I mean? You're fighting the current. That's kind of like why I'm trying to do this. Is let's see what we can do. Yeah. Yeah, cut the losses. Yeah, you gotta do that if you gotta do that. But that's why you gotta be very careful. That's why I said like day trading only is because of this reason. Like I don't know what's gonna happen the next day and the next day, because today could have been an update for all I know, but they had to drop that news. Very interestingly, they dropped that semiconductor news just before Nvidia earnings tomorrow. So I feel like they're trying to make everything as pessimistic as possible to make it easier for Nvidia to go up. Right? So Nvidia was up here at the resistance at around 140. If it stayed here before earnings, it's probably hard. But now that it's gone down, probably a bunch of guys are buying puts down here or something. That could make it so Nvidia doesn't need to say like really good things. It just needs to say okay things, and it'll just go back up to 150 or something. And 150 is all you need. If this thing goes up to 150, the market can stay like afloat. It just needs to stay afloat. And then all those crappy small caps and wild stocks and Bitcoin and all those can fly up again. And then you can short it again for that, because then March comes around, then we'll find the right time to short it again. Because otherwise, if this thing just collapses here, I don't know. That's really not good. That's really not good. Yeah. Anyway, another stock that was interesting is Xiaomi. So Xiaomi was introducing a new phone. They're going to come out with a new phone. So we have a minor new high on this one. So yeah, XIACY Xiaomi is probably my favorite Chinese stock so far. I've sold a bunch already. I don't know. I probably should just sell all of it. Whatever. Another one is BYDDY. So this one, if you remember, BYD is like the electric car company in China. So what I said was BYD is, a huge competitor for Tesla. So if you see this stock goes up, what do you think Tesla's doing at the same moment? Well, from February to, most of February, this is where most of the gains are for February. So let's see where Tesla is right now. So what's Tesla doing in February? Well, yeah, there you go. So let's see. Yeah, it's gone all the way down here. So we're here now at 292. Guess what? That's why I was talking about Tesla yesterday, because this is probably the time you buy. So at the close, I said, well, it looks like it's going to hit my targets. I'll buy it. There's another target for Tesla. It's a lot lower. It's at 283. So that's why I drew this. You see, this is why I drew this, but it's coming down quick. So, and it didn't go as high. So it didn't go as high as I expected before dropping. And then now it's already gone down this far, this fast. Then I would say I'll buy it here. Okay. So I'm using TSLR. So that's 2x leverage. So I'm buying that. So let's see, $22 here if you use TSLR. So instead of Tesla, but you're taking a risk. It's 2x leveraged. But let's assume it's not going to go any further down. Okay, and it's just going to go 400 now. And then once it hits 400, then we can go down to 283 or lower if March is bad enough. But yeah, okay, I'm willing to buy it there. I'm willing to buy it there, just in case, So that's good. And let's see, what else was I thinking about? Yeah, SMCX. Okay, I covered everything, right? So SFCR, that's it. So DNA reported earnings today, and I think that was a bust. This one would have been a good day trade, but I wasn't paying attention anymore. Like it was like the first hour was like this, the second hour was like that, the third hour was like this, and then finally afternoon it was finally going up. But I was like, I'm not trading. I'm not trading. If you don't do something within the first hour and a half to 2 hours, I'm not doing anything today. Yeah, if I'm gonna do a day trade. So that's why I hate day trading. I rather do swing trading. And yeah, you can have like these small cap things. You see why shorting can be very like popular, right? Like when you notice certain stocks, you can be like, oh well, you got this candle. Why wouldn't I short it? I'll short it here and just short it all the way down. So because here I was trying to like buy here and go up, but then once it did this, I'm like, oh shoot, got to get out again. It's like, fuck. But I'm not gonna short here, like get a margin account or buy puts or sell calls or how the heck do I know what to do? It's a lot of work, but yeah, if you're not like Martin Shkreli and you know how to read charts, yeah, you can short, especially here. Like you see this right at a resistance level here, it tried to go up, so it's like obvious, no brainer. You would have just shorted. And so for me, it's like, okay, let's see what happens in earnings. It goes all the way down into earnings. It's down 14% right now. So would I buy it tomorrow? I don't know. This crap. Yeah, this thing looked like it could have got ready to go up, but it's a lot of damage. And if it's going 14% tomorrow, ooh, that's too much damage. This thing is probably like Zim. It's going to take another quarter. So this thing will take another quarter to go up. So I got to wait 3 more months before I try this one to go long again. But it can go long. Like this thing could go back up to 16 and break out finally. That's why you always hate this thing. So let me talk about Zim. Might as well, because Zim. So I might add more to this. It's gonna start fighting at 22 and 23 soon. So it's still fighting. So it didn't follow the market. Very good. You want to pick stocks that are not following the Nasdaq right now, because the Nasdaq is getting punched up, and we don't want to be there. Let's see what else. Yeah, Chinese stocks, right? That's another thing that won't follow the Nasdaq for now. Maybe you'll follow it later. Let's see. Oh yeah, Hawaiian Electric. I forgot to mention this yesterday because that was on the list, but I just somehow forgot to go back to it. This one, beautiful. So you see this yesterday? So it was following the market, and then it just said, never mind, I won't follow the market, and ended at the high, near the high of the day yesterday. And today it barely got damaged. Perfect. This is what you want to see. So this thing can go up back to 15 again very shortly. So I don't know if this, because it's a utility stock, I don't know how much it will follow the market if it goes back down in late March, around there. That's what I'm thinking, or April. So this could easily hit 15 and then stop there, right? And then when the market turns over, it might just go sideways for a little bit, and then after it's done being at 15, then people will keep going back into safety stocks like utilities. Then let's see if it can go to 20 by summer. So this thing could go from 10 to 20. Maybe by the summer it'll get to 20. But for now, I'm going to target 15 first. And the first time I mentioned this stock was right here, right? So I don't know if I talked about it before it did this move in John Galt's like 24-hour streams, but for sure after it hit the top when I sold here, when it got to 16, 17, I sold, and I said, well, you know what? You might as well short this guy. And then after that, like a couple days after that, right? It just rolled over and just collapsed. It's just like collapsed, and then eventually by September, it took a while to get down here, but eventually it got back down here. So yeah, if I wanted the short, so yeah, that's why it's lucrative to do both things. Very few people can do both, like long and short. Very few people. Most people tend to go one way or the other. But it's still good to recognize it, even if you're not doing it. Anyway, yeah. Okay, another one. Moderna. So let me get out of here. Let me show you some. Let me show you this. Okay. Where is that stuff? Blah 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 blah. Oh my god. Okay, back to this thing here. So I'm done with my Bitcoin here. So you see Super Micro, it's up 22% overnight because they submitted their homework. So I don't know why that would make it go up 22% after hours, but I guess that's enough to make people buy again. Really dumb, but there you go. That's why I keep telling you guys. I don't follow fundamentals. Markets reactions are emotional. This is just some BPD chick or something. What the hell is this? First, it's like, yeah, let's crash and go down to the bottom into the close. And then all of a sudden, yeah, let's go back and give it back up. It's like, what? Oh, makes no sense. Who cares? I don't know why any of that news matters. But there you go. Lucid reported earnings. I don't know. This electric car company, I don't know, not good. And then we got Lemonade. Looks like it took a dump. So yeah, a lot of earnings so far have not done good. That's what I've seen. But this is what I want to show you. So first one was Tesla. Okay. So based on this, I see a 13 count. 13 count here on a 78-minute chart. So this is what I used, the DeMark indicators. I got them at 13 here. And if you can see behind the 13, there's a C5. And C5, I always look for C5s. So that's the propulsion, the D wave. So if you look at the top of this chart, there's a C5 here at the top, right? And then we got C5 here, plus we got 13, plus we hit this exhaustion level 293. So there's a lot of reasons why I said, whatever, I'm going to buy Tesla. Whatever. And they got a lot of bad news too. I got 2 articles lined up to read with Tesla. But for now, I'll give you that. Was Moderna, mRNA. And someone here is talking about Shkreli shouldn't do what, whippets or something? What is that? Huffing nitros? That's whippets? Does he do whippets? Well, Mark Shkreli has spent an hour yapping about Moderna and what he would call his baby if his baby had a black name or whatever the heck he was saying, blah blah blah. So I don't know. I guess I could play it. Yeah, I guess I could play it if you want to hear that. But yeah, he was doing his fundamental analysis on Moderna. But for me, let's go to the daily chart or weekly chart. I mean, Moderna, and let's look at the counts here for DeMark. So here we had a top here, right? This was back in 2021. Okay. Now we got our 13 here. We got 13 here on the weekly. So this is a lot more important when you see it on the weekly. And this was like 3 weeks ago when it made that bottom. Now I'm going to be interested in this guy. So this thing is still around 34, right? 34 something. So let me see. Let me see if it hangs around 30 in the next couple months, because I could see this thing roll right back up to 80, 100, maybe even more by the end of the year. So this could be a good play, a longer term swing trade into the end of the year. So yes, mRNA. All right. Remember that. We got vaccines to do. All right, there's a fire engine here. So before I read this thing. Well, electric car vehicle companies outside of China is like tough bet here. I don't know. Carvana is kind of like, yeah, it's probably topped out. Carvana's done. But that's just a used car maker. That's a service. Yeah, Lucid, you think it can do any better, but yeah, I would rather look at like Chinese like electric vehicle makers. Like the other one I would look at is XPEV, XPEV, because they also do AI. Kind of like, it's really these guys all do the same stuff with Tesla, compete with AI, compete with robotics, compete with EV. So yeah, XPEV is another one. That's another Chinese EV stock. But yeah, my favorite is BYDDY. So that's what I use. So yeah, that's why the Chinese market is better for the EV stuff. All right, let's go. Magnificent 7 dips into correction territory with Tesla lagging. No shit. And what did I say? Shares in Tesla have been bogged down by a string of bad sales reports and heightened competition from Chinese rivals like BYD. Yes. So that's why Ryan last year asked me why LI is another one. Yeah, there's another one after LI. NEO. I think that's another one, but I think XPEV is probably the better bet if you're going to do but BYD is the top dog. Those three are just eating each other alive. XPEV, freaking Neo and LI. They're all at the bottom. They're all just getting the scraps. So basically, it's a giant BYD versus Tesla, and then all those other three, they're just like trying to fight for like market share at the bottom here. So when Tesla goes up, BYD goes down. BYD goes up, Tesla goes down. Unless Tesla can find a way to coexist with BYD and be the top. These two will be the top two guys from there. And it also will affect Europe too, right? Because the Europeans love their EV as well. And that's why BYD, that's why China and Germany have such a close connection since Merkel. Merkel was always sucking Chinese dick. And when that happened, they had a lot of trade agreements. So that's why this whole Trump stuff, and then now we have elections in Germany and all that stuff is disrupting the whole world order, the new world order that they want to make, where China trades a lot with Europe. So, and the problem is like they dump a bunch of cheap cars in Europe. That's what happened. And BMW, Audi, freaking all those guys get like Volkswagen, they get crushed by all these cheap Chinese cars. So that's why now they're screaming, we didn't see this coming. That's the Chinese playbook. The Chinese playbook is like you open up your market to them. They come in, they undercut everyone else, your competition, okay, with cheaper prices, wipe out everyone else, and then now all you have is Chinese because everything's made in China. That's the game plan. All right, so yeah. Anyway, LI is like the whole range is a trading range. That's why I don't like it. So it's all crap. All of them are crap. I think XPEV might be better. Like it might have a better chance because it does more with the AI stuff. But I don't know. I don't know if that's gonna reflect. But so far, it's done okay. At least it got above 8 and 10 and 12, and now it's at 20. So XPEV, it's at the old high of 2023. Okay, well, let's see what happens. But anyway, back to the article. 7 of the biggest companies that have powered the majority of the S&P 500's index gains over the past 2 years are not having a great start in 2025, plunging into correction territory. Okay, what does that mean? Erasing approximately $1.4 trillion in value. The Bloomberg Magnificent 7 Index, an equal-weighted gauge that consists of Apple, Nvidia, Microsoft, Alphabet, Google, basically, Amazon, Meta, Facebook, Instagram, and Tesla, has fallen about 10% from a December high, passing the threshold that meets the definition of correction. Who says that's the definition of correction? All right, whatever. Elon Musk Tesla has been the biggest laggard for the index in the period, followed by Microsoft and Alphabet. While the electric vehicle maker had initially surged following Donald Trump's electoral victory in early November, the stock has sharply sold off since. Shares in Tesla have been bogged down by a string of bad sales reports and heightened competition from Chinese rivals like BYD. However, shares of the Facebook owner have bucked the trend this year as investors endorse the social media's giant's AI strategy. Meta recorded its longest ever winning streak in February, rising for 20 consecutive sessions, adding more than 320 billion in the process. Zuckerberg should be happy. So let's see what happened today. Tesla market value slips below 1 trillion as Europe sales sink. Stock now down 14% in 4 straight sessions of losses. Tesla EU sales fell 45% in January, even as rivals' sales rose. Uh-oh. A quick unwind in the shares of Tesla Inc. has pushed the electric vehicle maker market capitalization below the coveted $1 trillion mark on Tuesday amid reports of a stark slowdown in car sales in Europe. The Elon Musk-led company's stock dropped as much as 6.2% to $310 by 10:05 a.m. in New York. The shares have now cumulatively fallen 14% in 4 straight trading sessions of losses. Sales of Tesla's vehicles sank 45% last month across Europe, even as EV sales soared 37%. Oh, who is their competition for the overall industry? According to the European Automobile Manufacturers Association, it highlights the growing risk to the company's core car selling business from its chief executive officer's political forays. Oh, they stopped buying Elon Musk cars because of him supporting AFD or whatever. Alternative for Deutschland. All right, whatever. Does Wall Street even factor Tesla's robot AI shit? No. Yes and no. Yes and no. So when the so this is what you do with Tesla. When the stock goes down, it's because they care more about its car sales. When the stock goes up, it's when they don't give a fuck about their car sales. Because overall, car sales of Tesla cannot beat like Toyota or anybody else. None of that matters. So it's a selective brain thing. And it's not Wall Street, it's just traders, right? And it's just buyers and sellers. That's it. So if people care about bad news, they'll care about it. If they don't care about it, they don't care about it. It's selective bias, one way or the other. That's how Tesla always has moved. And that's why you have to look at charts. Charts tell you what it is. So right now, they care about it. But later on, they might not care about it. That's how it works. That's how it goes, man. Tesla's European dreams are stalling out with January sales plummeting, says Steve Mann, senior analyst with Bloomberg Intelligence. At the time, the EV giant is facing competition and controversies tied to Elon Musk. Yeah, well, whatever. The tables have turned quickly on Tesla. The stock soared late last year after Donald Trump won, blah, blah, blah. Yeah, we know that. Okay, whatever. Okay, we read that already. That's enough. All right, that's enough. I don't care about that. All I care about is charts. All right, guys, that's all I care about. And that's how you should think, too. And that's how you make money. So if we go back and look at things, you'll see where Tesla should be or whatever. So let's look at, let me look at XPEV for a while. So this is a monthly chart of XPEV. Very nice. So it's hit its bottoms. Okay. And now about to break out of the range. Good. Now let's look at LI. Noise. This is complete noise. I don't like this. So I'm not gonna play it. NEO is the other one. So maybe it's not NEO. So it's NIO. All right. Oh, look at this one. Nope. Don't buy. So that's why if you want to do Chinese automakers, you do BYDDY. Okay, perfect. This is what you want. And here, this is what I showed on this stream several times. You have this big square here. This is a range. You break the range, all right? You have high volume here. You go to the bottom. This was high volume. There was buyers because after that, it just went up. It went to the top. It hit the top. It pulled back, and it shot up. That was it. Bingo. That's all you need to know. Now, when do you think Tesla cares about being a car maker, AI guy, or maybe a lithium battery producer? What is it? Which way is it? It doesn't matter. Overall, you can look at this chart. So we have the bottom here that was made in January 2023. Okay, so it's been doing this. So now it's doing this pullback. So if you look at the monthly chart on this guy, it's not so bad. All right, it's not so bad. But you can see that this was a top right here made in 2021. So this was going to be a challenging thing to break. And if I look closely, all right, with Tesla, you can see this red candle here. What was this? What was this red candle for? I thought it was going to go up, 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 up. What happened here? This was when Jerome Powell spoke. Jerome Powell spoke here. You had high volume this week. What was the last time you had high volume? Here. This red candle had high volume. But after that, it just continued up. So this high volume area was actually buying. And then this large green candle was the election. So people here were actually buying, even though it was red. Look at it. This red candle couldn't even go back down into this green candle. And it was the highest volume until we had Jerome Powell open his fat mouth. He opened his fat mouth, and guess what? You were up here at 480 something, and you ended the week down. And then ever since then, you couldn't even get back up here because look at this one. The next one after, it was just like, Christmas. We're trying to get back up, but it closed here. And then ever since then, it was just like closed, closed, closed. The only time it will close high was up here. But even this close in this green candle in January 3rd, which was a good week for the stock market, couldn't even overcome this red candle here. So that's why, yeah, if you looked at this, if you can't do that, guess what? We had earnings on the last week of January, and we ended like this, just at the resistance of 403, which was made in November 2021. And then the week after that, down, 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 down. So, yeah, it just gave it all the way back. So now we're over here. So are you going to buy? I think it's worth it. I think it's worth buying here. I'm going to give it a chance. So, yes. Oh, Nikola. Yeah, I remember Nikola. Nikola, wasn't that CEO like accused of some fraud? I remember that one. That was funny. That guy was trying to mimic like Elon too. I think he was trying to be exuberant and whatever in his presentations and shit. Yeah, I think it was fraud. It was all fraud, man. Nikola. I don't know if it got delisted or not, but whatever. Yeah. In any case, okay, we're here. We're already here. So, yeah, it's worth it. So that's what I'm gonna do. Okay, so I read those articles for you guys. I think that's it. That's all I got. I have one more video. This one might be interesting. I think this guy is gonna accuse Jerome Powell of being wrong, and let's see what you think.
About the consumer confidence data this morning, say don't focus so much on the headline read. Look at what's going on with the labor market, and you're seeing some cautionary signs there.
Yeah, I've got a very different perspective than Tom Barkin and most of the FOMC committee. I don't really understand why they're all that concerned about the near-term trajectory for inflation. I'm not in the camp that we're going back to 2, but if you think about the outlook for the next 6 months, we have that lag impaired rent of shelter, housing related measures that'll put downward pressure on the core. We had core goods prices go from a negative 1.6% annualized rate at the midpoint of last year to 0. But when you look at PPI measures of consumer goods, import prices, those will probably start putting downward pressure on goods prices. So I don't understand the concern about inflation, and I don't understand, say, Austin Goolsby's characterization of the labor market as in a stable, full employment environment. We've had turnover in the labor market absolutely collapse. When you look at the spread between job switchers and job stayers in the Atlanta Fed wage series, that's negative. That's very rare. That only happened during the depths of the global financial crisis.
Really?
And you have the spread between the lowest income quartile and highest income quartile also negative, something that happened a little bit in the early 2010s when the labor market was struggling with, household deleveraging, also negative, which implies demand for labor is really weak. So for me, the labor market's in a very precarious spot. I'm not saying that we shouldn't be diminishing or trying to reduce government employment. I absolutely believe we should. We had government employment growing 1% faster than the private sector and wages growing 1% faster than the private sector through much of last year, something that's only supposed to happen during recessions. But that could put downward pressure on the labor market as well. So the Fed's narrative that the labor market's fine and inflation's a problem, I think, is completely backwards. And so
you're bringing me all the little nuggets today. A lot of this, I feel like I want like the full notes, and we're gonna follow up on it to understand. You also point out, look, when you ask people about jobs plentiful versus jobs being scarce, that's starting to revert to pre-election trends. I mean, is that how you'd characterize it?
Yeah, I'm sorry I skipped that key point, which was your actual question. But no, that jobs labor differential conference board survey, it's very, very similar to the household survey, had a super tight correlation with the unemployment rate, particularly before the pandemic and distortions. But that points to a 4.3% unemployment rate. And we printed 4 last month. Now, last month's numbers in the BLS survey were completely distorted by their annual population change. There is a good chance that a week from Friday, we'll get a pop in the unemployment rate and the Fed's whole narrative will change. But we are moving in, to me, clearly to a period of weaker growth. I think it was you that was talking to Dave Zervos about this the other day. He and I have had a similar perspective on the balance sheet and the influence there.
Right.
I think we are headed towards weaker growth, and the markets are waking up to it. That's what is driving the 10-year rally.
Let's bring.
Essentially, he is talking about like the bond market right now actually breaking out. So we had the weak numbers from Walmart last week, and then now people are expecting, wait a minute, what's going on here? So we're going to get some few pieces of data next week. Okay, we'll get the ISM data for manufacturing services. Then we'll get our unemployment data again. If that unemployment data stays weak, I have to understand if the market thinks bad news is good news or bad news is bad news. Because last week, they saw that Walmart news. It was bad news, and the reaction was bad. Sometimes you have bad news, but the reaction is good, because then they'll be like, oh, the economy is not as strong, so then inflation is not a problem, so the Fed will change their tune and cut rates again, and then the stock market can go up. Or, well, the bad news will be really bad, and they'll be like, holy crap, the economy is about to collapse, we better sell everything. That was the reaction last week, right, with Walmart. Now, of course, if you were listening to us here on this channel, the market already gave some little hints with like the PAL stuff during the minutes, and then you saw Palantir crash, SMCI crash. You saw a whole bunch of stuff crash on Wednesday before Walmart. So that's why it's always confusing. The news guys are always going to try to figure out, why did the market do what the market did? On Wednesday, you didn't see any problems. But if you were looking at individual stocks that were moving up a lot, like SMCI, Palantir, those stocks got hit just before close. So to me, I'm always wondering, is this an options thing or is it a real thing? Right? We'll find out tomorrow with NVIDIA, because the market has been pushed down. Good. So it'll be easier. It should be easier for NVIDIA to just say, hey, things are just okay. We're not making big numbers in our growth, but that should be enough to keep the market afloat until next week. That's what I'm wondering. So that guy was essentially saying, hey, unemployment data is going to be bad. Eventually, it's going to show bad numbers, and the Fed better wake up and say, hold on, what am I going to do? Am I going to fight inflation or am I going to fight employment? They can't do both. The worst case scenario is if the market thinks there's a stagflation event coming, where you have high unemployment and you have high inflation. We haven't heard about that since the 70s. If that happens, it's over. The Fed can't do anything. Trump can't do anything. Nobody can do anything. We're screwed. There's no economic theory that can help you then. So that's when the stock market will crash like 10, 20%. That maybe that's what's going to happen eventually, right? In March. They're going to figure out like, hey, wait a minute, it's going to be stagflation. And then later on, you'll get more data and it's like, wait a minute, it's not stagflation, it's something else. And then the market moves back up. So it's some schizophrenic trading event. So this year is going to be sideways. That's what I think. The problem is if it's going sideways and you're going to trade, where are you going to go short? Where are you going to go long? Back and forth, back and forth. Investors are not going to like this year. That's why I said since January, it was like, no, it's going to look bad. And I think it's going to continue. So most of this year is going to be sideways. And then eventually it will get resolved. I don't know when, but it will. Okay? So that's what you got to worry about. Now, tomorrow we'll have Lowe's, Low. So that's going to pair up with Home Depot. That's about it. There really isn't. There's going to be Advanced Auto Parts, but man, that's not O'Reilly. That's not AutoZone. That stock is, I don't know. Maybe it'll change. But so the big boy will be NVDA reports after the close, though. So all of tomorrow will be like probably a nothing burger day where we go nowhere and everybody's just holding their breath for NVIDIA. Tough. Real tough. All right. So let me show you the chart for bonds. Okay. Oh, Axon, I got to talk about too. So Axon reported today. So it went down to like 480, nearly covering this gap. After hours, it jumped 14%, but that means it's only going back here. So it is double top, right? It had top here in December, top here again. I think the damage is done. This stock is going to have a hard time making new highs. So if you're looking for body camera and police drones and stuff like that, yeah, it's over. I think this trade's over. Or not this trade. I mean, this was a great long-term stock since 2022. So this one plus Palantir were my two babies. These two, but like I said, like it's over. It was likely over. Palantir is definitely over, you know. Like if we look at Palantir, yeah, man. Well, filled the gap at least, but I think it's going to have a hard time getting above like its old high. It might get to its old high, but that'll be it. It'll just follow like Axon and just go sideways or something. If you're lucky, it'll go sideways. If you're unlucky, it'll just because like yeah, Martin Scully was like talking a whole bunch about like with Palantir, it has to report very good earnings growth right now. I think, you know, at this point since August, September, I was like just shocked that this thing could go up to 100 by last earnings. It's just like, dude. Yeah, you're kind of pricing in a lot of growth for the next 5 years, you know? So if it's going to be a $130 a share company, that's probably something that will happen, but I think it's too early to price it at that level. So if the market doesn't have liquidity, yeah, don't expect this thing to stay up here. It'll eventually come back down. If we go look at Carvana, definitely, yeah. See that kind of like that too. Kind of made a minor new high and it came right back down. That's bad. I think it will get stuck here. and then eventually it'll be a good short because it'll probably dance between 155, 200, and then eventually in 2026, if not earlier, it will just collapse and go all the way back down when the economy turns it around in 2026. So you would probably be watching this for a short. It will be a big short too because this thing could go all the way back to $8 at that time. Okay? So yeah, I mean, if you're a big shorter, I would look at this. Yeah, but for now, no, don't do it. Don't do it. Don't do it. All right. Let's see what else. Yeah, Salesforce reporting and Snowflake and AI. Okay, I'll talk about it tomorrow. Let's see what happened. We got Snowflake, we got other stuff. So let me put up the list. But Snowflake, it's a good software company, but its stock is pretty terrible because it just does this all the time. I don't know if it's gonna break out. Snowflake, AI. Yeah, it did. I was in it, but it failed to hold here, and I don't know if I want to get back into this guy anytime soon. It's just like, ugh. Oh, whatever. I ain't gonna play that until I see something. What else we got? Joby, and IONQ. Okay, we got Joby. Oh man, this is not my favorite electric vertical and takeoff company. I like Archer better. This is the one I like. But even this one, you see, it's coming back to 7 from 12. And I don't know if it's going to hold. This one also has earnings, but on Friday, I think. Oh, Thursday afternoon. Okay. ACHR. And let's see what else. There's another one. Mara. IONQ. Yeah, IONQ. Let's see. IONQ. So this is the quantum computing stock that started it. This one was the one that did it right here. It got a government contract. After it did that, it just went up. And everyone else started following it after Trump's election. So now it's doing this, though. Now it's like, yeah. Once you break 28, see ya. Bye-bye. Back to 14 and lower again. I don't know. Earnings is tomorrow. Earnings is tomorrow after the close. I don't know what's going to do. Got Mara. Mara is Bitcoin miner that I usually... So 2023 was a better time for the stock. I played it here in 2023 into 2024. So it went from like $8 to $30. This was the best time. I was quite disappointed in how weak it moved from September 2024. So this is very different from the September, October of 2023, right? This had a 3x move pretty much. This one, like a 2x, barely a 2x. Terrible. Now it's down here and we got earnings. Yeah, so Bitcoin probably has to go really high for this thing to do anything right now. So that means a lot of these Bitcoin miners have diluted their shares way too much. They've issued way too many shares between that time and now. So if you want to see this thing back at 80 when it peaked out, so I was in this stock up here. November 2021. I remember those days quite fondly. Just before Thanksgiving, right? You know, you just like, yeah, nobody cared. And then all of a sudden everybody cared about like Omicron or something. And that was the end of it. That was over. Everything started collapsing at that point. So all the small cap stocks, everything collapsed. Bitcoin collapsed. Yeah, so we're okay. Well, okay, we're now at $12. It's pretty dang cheap. Okay, if you can get it at $8, hell yeah, I would definitely try it again and see if we can jump up back to 30 from that point in May. So I think Bitcoin will get back up in May, but for now, no. Bitcoin could go all the way down to 70,000 or 60,000 for all we know between this point and April, and then May it will go back up. So if this thing goes down to $8, okay, keep this in your radar. MARA, yeah. All right. Let's see what else we got. Root. Oh, Root. Yeah, Root is a, man, that's a meme stock. Yeah, this is a meme stock. You see this? You see this guy? $3 to 100. Yeah, this is a meme stock. This thing has barely any volume. It just does this whatever on earnings. I have no clue what this is going to do, but I remember the name because yeah, this was a great meme stock here because it crashed completely from 2020 and then everybody started chasing it here, just doing whatever they want. Yeah. This one, this is definitely a Wall Street bets type stock right here. This is your meme stock. It's not GameStop. It's this thing, ROOT. So if you want to gamble, this is the casino to be in. Going from $3 to $100. Yep, this is the casino. All right. Yeah, that could be fun tomorrow if anybody wants to gamble. All right, man. See you guys. This is about an hour, so I think I'm done. I don't think I got any other videos. I'm not gonna play your Skrully thing. Oh yeah, but before we leave, here I'll play this. Okay, I'll play this. So this was the Bitcoin warning I put out yesterday, right? I played this from the Wyckoff guys.
We have increasing volume, but each attempt to rally looks quite weak. And even when we compare the volume on the demand bars to the volume on the supply bars, we see that most of the times the red volume is higher than the green volume. Bitcoin was attacking the resistance, but this attempt was very short-lived, and in fact we are fading here around the level of the overbought condition. And I still think, guys, that in order to resolve the structure, we need sooner or later to revisit these levels again. So something like this, for example, when we have a final shakeout, grabbing liquidity in this short-term value zone, and that will be the point where I would like to see more demand coming in.
All right. So look at this. Did we have that today or not? We kind of did, but I was hoping for more, going down to 80,000. But it looks like, yeah, we got it. So we can bounce back up to 99K into Friday. That's a good trade, right? So that's why I said, like, yeah, I'm going to buy MSTR. I'm going to do that. All right, whatever. Let's see. Let's hope and pray NVIDIA doesn't screw everything up. So that's what I'm hoping for. So, again, go back, watch the video, and see what stocks and the banner below. But look at the banner. Look at the banner. I put all the stocks I'm looking at. And I'll see you guys tomorrow. All right. So, yeah, like and subscribe. Like and subscribe. Like and subscribe. Like and subscribe. And, yeah, go donate. You only got like a few days until Black History Month's over. So $20 a day. Portia J, $PORSHAJAYE, or PayPal at PORSHA@jghb.info. That's also her email. Or you can email me at CRACK@jghb.info. Okay, and we got like 1.28K subscribers now. So not bad, not bad. Let's see if we can get to 1.3 by the end of this month. I don't know if we will, but let's see. See if we get hit more algorithms going, huh? And I'll see you guys. If I don't come in tomorrow morning, I don't think tomorrow's gonna be interesting until after NVIDIA. So I'll probably have to come in the afternoon because I don't think anything's gonna happen tomorrow. But I'm definitely probably gonna sell SMCI, SMCX, whatever the heck it is. I'm out. All right. It's up 22% for SMCI. So that means 40-something% to 50% on SMCX. So that's what I'm planning to do. Get out of that one. I just got lucky. I wasn't planning on that. But the real pain or the real fun will continue afterwards. Okay. I'll see ya.
Feel like I should go. like I should go. Feel like I should, feel like I should, feel like I should, feel like I should flow.